Hey team, hope you're well. Today I want to make a video explaining why I told a client of mine to not go ahead with buying an investment property. And for a lot of mortgage brokers, that actually might be quite contradictory to what a lot of brokers will say. Generally, mortgage brokers were incentivized to arrange mortgage lending and additional lending because that's how we're remunerated, right? But I specifically said for a client, this doesn't make sense with your position, and they are wanting to buy an investment property, but I went through the core reason why I didn't think it was a good decision. So I want to go through this video today because a lot of people are obviously looking at buying investment properties, especially if you're looking at this video, but in a lot of scenarios, it doesn't make a lot of sense. And I think it explicitly made sense in this scenario. And the clients are actually quite happy with the fact that I've given them this input because they spoke with another broker recently, and they were saying something along the lines that they should buy an investment property, which completely contradicted my opinion for what I think they should do with their position. So let's get into a little bit of their details. I'm not going to obviously go through exactly what their numbers are, but I'm going to give a bit of a guidance very, very similar to their position. Okay, so right now they own one property already. It's around about $900,000 in value. That's sort of whereabouts the bank valuation is sitting, and their existing lending is sitting around about $715,000. I like to think for a lot of people maybe that have bought in the last 10 years in Auckland especially, this is a very similar scenario to what a lot of Kiwis are in right now. Very, 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 very reminiscent to a lot of positions. And this is another reason why I wanted to make this video. So in the scenario, they have about 20% equity. So with the current property's valuation, if they want to get the best cashback interest rates from the main bank lenders, if they can prove they can service $720,000 of debt, they will get access to those cashback and best interest rates. With their current position, they're just sitting in that ratio, right? They came to me though the other day and they said, we found a property for $620,000 that we want to buy. Now, in the scenario, right, if they don't have any cash that they can contribute to this property acquisition, this would be the future position for them. They would have $1.52 million worth of property, $1.33 million worth of debt. Now, immediately, this is the first thing I say to the clients as to why I initially didn't even bring up the idea of maybe looking at an investment property right now, because with these numbers, this to a lender, for one, is not something they'd necessarily want to partake in because the exposure to them is quite large, right? In the event, say, maybe, they need to, they can't make the repayments and not being cooperative on this. They may need to sell both these properties and maybe will just break even. It's going to be an exercise that makes them a little bit concerned from a lender's point of view. And also here, they are quite over-leveraged, right? Say if the property market dips, which definitely could happen over the next couple of years, there is a reality that, property prices could dip another 10% over the next couple of years. And this would, put them in a position where the value of their properties would subside to 1.3 million and 68,000, which is just more than what their existing lending is in this scenario, right? So I just think for their position right now, this would leave them potentially both vulnerable as clients, and a lender is not going to be so keen. But even in the event, if they are super, super motivated to do this, maybe if, for example, they're buying for $620,000 and the property they're buying has a valuation of $700,000, maybe there is a circumstance where a lender is going to be cooperative and keen to do it in some regard. So we can run into the scenario of doing that, but I likely think if we go to the cash flow expenses just for the rental property alone, say they're buying for $620, they don't put any cash into the deal and they just use their equity. If they can do this, so to speak, their interest rate is probably going to range, I would say, somewhere between 5 to 5.5% with the low equity margin that will be charged to them for getting this loan, even if they're approved, right? So let's say 5.25% is their rate. $790 a week is going to be the mortgage repayments on this investment property. I reckon from the specifications from this property that they told me about, it's probably going to be about $600 per week they're going to be getting. Annual rates and insurance, probably pretty standard. I'd probably put them here. These could be a little bit conservative, but we'll use them in the calculation. 8% for a property manager. They're going to be paying $324 to top up this investment property moving forward. Now, going back here, with this amount of debt, $1.33 million, this would be pretty much capping out at what their capability is with their income position. I won't really disclose and go too much into it, but it would mean that in this circumstance, maybe if they have reduced hours or one of them, God forbid, something happens with their employment, they would be in a tricky spot where they might be vulnerable and have to sell at least one of these properties to get by, which puts them in a tricky spot, right? The whole purpose of an investment property is to make a sensible financial decision that is moving you forward, and the pros completely outweigh the cons. from my perspective, like I could say, yeah, you should get a mortgage of $620,000 and I will organize that for you and I'll get paid for it. But this completely doesn't make any sense to me. It's completely contradictory to what an investment property should be in this scenario. Maybe if there's a incredible deal that comes up and they're fully aware of their position, and maybe if they're going to have a dramatic increase in income, or there's going to be some inheritance moving forward, or something to mitigate these concerns, I really don't think this is sensible right now. Maybe down the line, in say 12 to 24 months, maybe if their property value does go up in value, which is quite probable, and their debt reduces from $715,000 maybe to $650, there's a bit more equity available here, right? We've got $110,000 of potential equity if they're going to continue living in this home. This could then be used to mitigate the fact of them having a low equity margin moving forward in the event if they were even approved now, right? This whole scenario doesn't really make sense to me to look at an investment property with these metrics. And this is what I said to them. So to mitigate this, I could have just ended the conversation here as well. But this is another thing where I thought I could be impactful for these clients and what I ultimately recommended doing and what I reviewed for them, okay? So with their debt position, they have been with the same bank for, I actually don't know off the top of my head, but let's just say in this example, it's been about 5 years. Their average interest rate, I think, is around 4.8% right now. And I can't actually remember the loan term that their existing lending is on right now, but let's just say 30 years, okay? So on their own home, they're paying about $865 per week, okay, on principal and interest. Now, because of the fact that they've been with this lender for a long amount of time, I said to them, hey, can I please request what they would offer you to keep your business, right? I work with all the banks in New Zealand, and I said, look, is there any opportunity that you would offer them something? They've been with you guys for X amount of time. Is there any cashback incentives? What would it cost to move? So I had those numbers for the client. So I reached out and I got those numbers. So I said to them, look, you could be eligible for up to this. A new bank might offer you up to 0.9% of your total lending if we submit an application to them. So worst case scenario, you might be able to get this amount of money because you've been with your existing bank for the X amount of time and there's probably not going to be that many fees to move. So in the meantime, they might get this amount. Maybe they move to a new bank and get this cashback incentive, which normally has a 3-year agreement. They might as well do it because they're going to have the existing lending anyway. They're not thinking about selling, and maybe down the track, once they build a little bit more equity from the property increasing in value and their debt reducing, we look into the investment property then. But for the moment, they get, the $6,500 because they're in the position where they're eligible for this potentially at a new lender if their existing lender isn't going to match it. So that's ultimately what I recommended for the clients, and they were happy with that outcome. And I think that's a pretty sensible move going forward. You guys may disagree. Maybe you think the property market's going to go up 10, 20% year over year for the next couple of years, and maybe they missed the opportunity of buying an investment. But to me, I think this puts them in a very vulnerable position. So that was my analysis for that client. And I figured a lot of people are going to be in that position of thereabouts right now. Like I've definitely noticed in 2026, a lot of calls I've had have been similar to this sort of call along the lines of it. So anyway, that's my take, guys. If you enjoyed today's video and you maybe potentially want to look at having an analysis of something similar with your position, all my stuff is in the description. You can leave your details and we can do an inspection of your position and what makes sense for you moving forward and put a plan in place. If you don't want to do that, that's totally fine. I'll leave some videos on the screen that you can watch that may help out. But yeah, anyway, guys, cheers for watching the video. Catch you later.